Hello everyone and welcome to the NinjaTrader Ecosystem webinar room. My name is Juanita Archuleta and I work here in the Denver office. We have a very special event for you today with Dimitri of Seasonax. I would like to mention that it is important to understand there are substantial risks in trading commodity futures contracts and Forex. You should carefully consider whether such trading is suitable for you and will depend on your specific circumstances and financial resources. It is possible to lose all funds deposited with your broker and could even incur losses beyond these amounts. Please inquire at the following link for a full copy of the CFTC risk disclosure or if you have any additional questions. The presentation is presented today by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading software. Any brokerage-related questions should be sent directly to our brokerage team using the following phone number and email address. Thank you everyone again for your attendance today. With new tools added nearly every day, NinjaTrader Ecosystem is home to hundreds of apps and services. You can quickly and easily find tools and services you're looking for with a simple keyword search. You'll also find information about upcoming webinars and an on-demand video archive to view event recordings using the following link. Also, if you are active on social media, we do ask that you follow us on Twitter and Facebook using the handles that I just placed in the room. NinjaTrader is always free for advanced charting, strategy backtesting, and trade simulation. To ensure you are on the latest version of NinjaTrader and pick up a free live data trial, please use the following link. You can also purchase or lease NinjaTrader using the following link. And if you are just getting started with NinjaTrader, we do offer free live training on a daily basis. You can review our training schedule using the following link. We are very excited for this event in which Dimitri will show you quite a bit of information. And without further ado, it is my pleasure to welcome to the NinjaTrader webinar room, Dimitri.
Thank you very much. It's a pleasure for me to talk on this Ninja webinar. Thank you everyone for joining. The topic is seasonality, and usually the people or many people are thinking when we talk about the seasonality of commodities, for instance, or maybe of stock indices, but seasonal patterns occur in many markets, not only in indexes, but also in individual stocks, in currencies, of course in commodities, and even in bonds. And further, talking about seasonality, mostly we are talking about annual seasonality, but there's also intra-month seasonality and intra-week seasonality, and of course intra-day patterns. And further, which is not based on regular calendarian pattern, there are recurring events which have also systematic patterns. For instance, when futures expire or when there are specific holidays, shifting holidays or shifting elections and so on. Let's start with something which almost everybody knows. This is the sell in May and go away saying, also has also the name of Halloween effect. This pattern is known at least since the 1930s. And since then, the rule has outperformed its seasonal opposite quite significant. What you can see here is the chart, the equity line from the 1960s of the Dow Jones, once in red, for an investor who invested from May to October, meaning he did not follow the saying, did the very opposite. And in blue, you see the performance in the winter, from November until April. This is the winter half. So you can see the saying, sell May and go away, or also Halloween effect was very present. You made more or less all the performance in the winter season. I show you this very same now for other countries than US. Here you can see a table of the 11 biggest countries by market cap. On the bottom you see the US, yeah, and it starts with Canada, China, and so on. And on the right you see, right half you see first the return in the summer month, than in the winter. And you can clearly see that in all countries, the winter months did outperform the summer month. Only in 2 countries, Hong Kong and India, you can see there was a somehow reasonable performance also during the summer months. In all other countries, the performance during the summer months or summer half of the year was very low or even negative. Yeah, if you look, for instance, in a country like Taiwan, we have almost minus 4% in the summer half and 14% in the winter half. So you have a Halloween effect in this country, which is even much stronger than in the US, where it's quite well known. Sell in May and go away is a very simple saying, of course. If you want to go more in detail into seasonality, you want it more accurate, and for this we create seasonal charts. You can here see the seasonal trend, how a seasonal trend chart is being constructed. You have on the left side of this chart many years of one instrument, yeah, starting with 0, and on the right you have the average of the return, in this case of a stock called Choice Hotel, and I will show you now more in detail how the seasonal trend is. Here in this case of the Dow Jones, yeah, this is a seasonal chart, not a normal chart, constructed of the returns of 30 years. And here you have the calendarian months on the x-axis, and on the y-axis you have the performance. You can clearly see that the Dow Jones typically drops a little bit into January, then it does rise until end of April, then it continues rising a little bit, but not that much, until end of July. And we have also here, for instance, in June, a small drop. And then we have a tendency to drop, especially in September and October. And then you can see here the autumn rally, and here at the end the Xmas rally starting in the middle of December. This is the typical pattern of the Dow Jones. And I go now further. I look now at the typical seasonality calculated over 116 years, so much longer. And of course, the things are changing also in seasonalities, but some things are the very same. For instance, the weakness in September and October is the very same also over a very long period of time. And you can also see the Xmas rally is also a very stable pattern also over a very long period of time with more than 100 years. And here again, the saying sell in May and go away means that you sell here and buy here. Yeah, and you can clearly see that it makes sense to sell in May, but if you look in detail, it makes even more sense to sell and buy at other days of the year. If you are trading or investing, of course, you buy at a specific day and you sell at a specific day. We call this pattern. I show you here one example. You can do this, of course, with many, many, many patterns, thousands and millions. Here I show you for the German DAX, the autumn rally, which starts here at the beginning of October, a little bit earlier than in the US. Yeah, and I did it here until the end of the year. You can go also 1-2 days further. And you see here an average performance during this time, which is, by the way, 86 calendarian days and 58 trading days. You can see an average performance of 9.21%, which is an annualized performance of 45.36%, which is much more than the German DAX did over the entire year. And here the bar chart shows you how this period of the year, the autumn rally, performed in particular years. Yeah, and you see only in 3 years there was a loss, and almost all years you had a profit in this case. And I showed you now the seasonality of stock indices, but not only stock indices have a seasonal trend, also stocks themselves have an individual seasonal trend, or can have. I show it here for you for the Microsoft stock. Yeah, this is the average return of 15 years of the Microsoft stocks. You can see until the beginning of October, Microsoft on average did not perform at all. And then you have this huge rise, yeah. And the reason for this huge rise in this case is that Microsoft usually reports quite positive earnings, makes earnings surprise when the reports are here, and this leads to this particular pattern of Microsoft in this case in the season. Then we have also seasonality in other fields, in this case in the currencies. Yeah, you see here the US dollar index calculated over 30 years, the seasonality. And what you can clearly see here, that in December the dollar typically drops and it turns exactly at the turn of the year, and then the dollar typically rises in January, February. And the reason for this is, of course, is connected with bookkeeping, and based on taxes, it makes sense for many big or also medium-sized American companies to shift money abroad and to daughter companies to avoid paying taxes. And this leads to this pattern that the dollar drops at the end of the year and then turns exactly in average at the turn of the year. And one example, apart from the stock markets or general from the markets, from the regulated market, this is the seasonality of home prices. And what you can see here is, I did it a little bit different. I show you here the seasonality as a deviation from the detrended average. I do this just that you can see it more clearly than with the charts before, because house prices are not that volatile than stock prices or other market prices. And you can here clearly see that home prices have their seasonal top in July and August. The reason is very simple. In the summer months, during the summer months, the sun is more hell, the weather is better, and also flats and houses are inside more hell and more appealing. So this is the reason why the people are ready to pay a higher price during summer months for the very same house than they are doing it for the winter in the winter months. So if you plan to sell your house, start somewhere in April, and then you will have a better chance to get a nice price. Until now, we looked at the seasonality, at the annual seasonality. There are, of course, other patterns as well. In this case, I show you here the curve, the trend of the S&P 500 in average of the month. What you see here on the left side is the beginning of the month, and here you see the middle of the month, and here you see the end of the month. You can clearly see that the S&P rises a few days ahead of the turn of the month and continues to rise in the beginning, and then in average it even drops a little bit. The reason for this pattern is simply that many payments and wages and so on, and following also, it follows then also investment payments like fund saving plans and things like that are at the turn of the month. And I have analyzed this pattern of the turn of the month effect also internationally for the 11 biggest markets again. And here again the US is at the very bottom. And here you see the return of the mid of the month here from the 70s. The chart before was from the late 1920s, 1928 I think. And you can see that the turn of the month leads to a higher performance than the mid of the month, despite it's just a few days. But you can also see that in other countries, like in Korea, the effect is even much higher. Yeah, 12.49% at the turn of the month, a few days, and minus 3.5% at the mid of the month. Yeah, also in other countries like India. So in all countries, the effect is even bigger than in the US. I think this is also very interesting because this effect there are many publications about this effect in the US and only a very little about internationally. And internationally, the effect is much stronger. Coming from annual seasonality over intra-month, I go now to intra-week. Just you see here the return of the S&P since the year 2000, and here for the particular days of the week, calculated here, for instance, Tuesday is from Monday close to Tuesday close, and Tuesday is the strongest day, even stronger than the whole S&P, and Friday is on average the weakest day. And I go also to another instrument, in this case gold. We have also a very strong intra-week pattern in gold. Almost the whole performance of gold appears on Friday. The other days in average are more or less quite boring, to put it this way. Yeah. And of course, from intra-week, we can also go to intraday. What you see here is the average course of the S&P index calculated here over 51 days, starting at the opening until the closing of the spot session of the S&P. You can see here that there's an intraday curve at best price, which is about 1 hour before closing. Yeah, this changes, of course, but there are also intraday patterns which are stable over many years, surprisingly. Even in nowadays market where you expect everywhere a good arbitrage and high frequency trading and things like this. So this is also a pattern which gives you at least the opportunity to buy a little bit cheaper, for instance, and do things like that. These were calendarian patterns, but as I said already in the introduction, there are also events which occur regularly, but not always on the very same day. These are, for instance, election, last trading days of futures and options, holidays, reports like the labor market report, and so on. How do they affect the market? Yeah? And I can already say now, they affect it in a way differently than most investors do expect. What you see here is another kind of chart. I have here a kind of anchor. In this case, I make the analysis of the FOMC announcement. Yeah, this is when the FOMC, the Fed meets 2 days, and then on the second day they make the announcement. And what you see here is 5 days before and 5 days after the announcements, the average return of the S&P 500 based on 160 events, so over 20 years. And you can clearly see that the S&P does rise the 2 days until the end of the FOMC meeting. Yeah, and then it typically, in average, does not the S&P does not rise and not drop significantly. So this is often you can observe this very often, that ahead of an event the stock market does rise, and then when the event itself comes, nothing special happens anymore. I show you also another event. This is the S&P triple witching day, and now I show you not 5 but 15 days ahead and 50 days after this event, and you can see that some 9 days before, the S&P typically does rise to the futures expiry days, and then it goes more or less sideways with the tendency of slightly dropping, yeah, falling. Yeah, this is also very interesting. So there are many events around, and you can, of course, combine these events with many instruments, not only with the S&P, but also with currencies, commodities, and so on, also sector indices or particular stocks. One more event I find very interesting. This is, of course, very specific. What you can see here is 12 months ahead and 12 months after big sport events, which I define as Olympic Games and Soccer World Cups. So every 2 years we have an international big sport event, And I did this analysis starting in the 1960s with the stock market of this particular country where the sport event takes place. And you can see that already 11 months ahead of Olympic Games or Soccer World Cup, the particular stock market tends to rise until 1 month before the opening, and then it already drops. Yeah? So the reasons, of course, are investments. If there are these huge, large sport events, then typically there are many investments in this country, infrastructure, and so on. And of course, the media also starts to focus on this country. And obviously, this also attracts investors in the stock market. So if you are interested in this pattern, the next Olympic Games are in Japan, just to inform you. And now let's go to trading in the practice. Yeah, how you can make it for your investment and trading decisions. First, very important, every seasonal pattern is as I showed to you, is an average. Yeah, that means not every year follows the seasonal pattern. I show you here an example. This is the Xmas rally starting in the middle of December until the beginning of January. Here were the S&P over the last 69 years. And you can clearly see that in many years, in the majority of years, the S&P does rise during the Xmas rally, sometimes even very high, up to almost 10% in a few days. But of course, there are exceptions. You can see them here. And the biggest exception, by the way, was last year, 2018 to 2019. Yeah? So seasonal pattern is an average. It works often, but not every time. Yeah? And another point is also seasonality can change. Yeah? You can see here on the left side the seasonal trend of the Dow Jones from the 1950s to the 1980s, and then from the 1985 to 2000. This was a bull market, and during the bull market you don't have so many drops in the seasonal average, of course. Yeah. So not only there are exceptions in seasonalities, some years yes, some years not, but there are also changes in seasonal pattern. For instance, in a bull market, a seasonal pattern tends to change. Yeah. But also here you can see the year-end rally and so on does exist. So a real good seasonal pattern continue to exist also during bull and bear market. Now, the practical thing. There are, in my opinion, 5 ways you can how you can trade seasonality. One is, of course, you can trade every seasonal pattern directly, meaning you go long, for instance, in mid-December for the Xmas rally and close the position at the beginning of January. You can use seasonal pattern for timing. Yeah. For instance, if you are a long-term investor, you buy stocks in November, so ahead of the autumn rally and not in January. A third possibility is filtering. This is more, of course, for instance, for short-term traders. Yeah, you could, for instance, filter if you don't go. You could, for instance, avoid going short during the Xmas rally. Yeah. Or you can also reduce your stock market exposure in September and October if you are more a conservative investor. And then there are 2 more possibilities. And one is, which I will show you in the next slides more in detail. One is stock rolling in selection, like I mentioned already, Microsoft in October. And one is also a very practical approach. This is seasonality as additional input to the trading approach, which you already are using. Now, let's start with seasonality in the stock market. I have shown you Microsoft. I show you here Novo Nordisk. This is a Danish health company, which has a strong seasonality in February. Yeah, and of course it may make sense to buy Novo Nordisk at the end of January until the beginning of March to follow this seasonal pattern. And I show you a next example. This is Adidas, the German sport equipment producer. And Adidas has a strong seasonality from the beginning of March, so more or less when the good seasonality of Novo Nordisk is over until the end of April. So you could theoretically at least roll from one good seasonal stock to another, or from a group of good seasonal stocks to a next group of seasonal stocks. And then this is of course schematic. You get a rising performance. Yeah. And this, the last practical from these 5 which I have shown you was seasonality as additional input. Here I show you a trading system for the German DAX. In my opinion, it's the best German, or to my knowledge, it's the best German trading system with a real track record, not backtesting, because the author of this trading approach did publish it since the mid-90s. And since a few years there are also products for this trading strategy on the DAX. It's a very simple approach. He uses the rates, inflation, dollar, and seasonality as input on a mechanical base. Here's the trigger line, here's the DAX, and here in the chart above you see the DAX, and here you see the result of his trading approach. So this is a possibility also how you can deal with seasonality. You keep at your trading strategy and use seasonality as additional input, as filter, for instance, or somehow for timing, or depends, of course, on the way how you are trading and investing. And I come now to a kind of joke. Yeah, seasonality exists also apart from markets. In this case, these are divorcing rates from couples. Yeah, typically couples divorce, separate more or less when there are holidays or in front of holidays, but also on April Fool's Day, there are more separation of couples, so be careful with jokes on April 1st. And now I will go shortly also to the web app. The web app you can approach over www.appseasonax.com. Yeah, it offers you free access to 30 popular instruments like stock indices and the bi-weekly research report. And especially for you now, we have a voucher, Ninja 50, which offers you a one-time 50% off, and it's Ninja 50 with small capitals. Yeah, you can, when you try it out, you can just type it and you have one-time 50% off. Now I go shortly, I try to go to this, to the web app. Yeah, so I hope you see it. And you can here, this is the screen, you can here enter, for instance, Microsoft. Yeah, and then it shows you immediately the seasonal chart. You can select here the period. Yeah, and here you can mark what we already did in the example, the Microsoft Corporation, the pattern. You have here the annualized return. You have here on the bottom the specific particular years, when did Microsoft rise in this years and when not. Yeah, and you can do this also with many other instruments. More than 20,000 currently, for instance, with gold. I'll show you quickly. Yeah, or with silver. Yeah, I show you also. Silver has a strong trend, for instance, in the first 2 months of the year, which is here. Yeah, because then the orders from the industry come in. Yeah, and there are also more things. For instance, I go now for the S&P. I go very long, 69 years. Yeah, You have here filters. Yeah, you can, for instance, select post-election years, midterm election years, pre-election years, for instance, or you can skip 1 year which you don't like, for instance, a crash year or things like that. Then you have features like here you can make detrending, then you see a little bit clearer the trend. And you have also here an automatic pattern detector, which shows you a strong pattern automatically and so on. There are many features and many statistics which can help you. And as I told you, you can have access to all this 20,000, more than 20,000 instruments currently. We are expanding it all the time. And if you use Ninja 50, this voucher, you have a one-time 50% off. Thank you very much for listening. It was a pleasure for me to join you, and it would be nice to see you again in some future webinar maybe, or on the website. Thank you very much.
I want to give a special thank you to Dimitri of Seasonax for his great presentation today. Everyone in attendance will receive an on-demand recording of today's event, so please keep an eye out for that email. NinjaTrader Ecosystem is pleased to sponsor these weekly vendor events as a value-added service for our clients. If you do find value in these events, we hope that you will attend them on a regular basis. I would like to remind you that the information provided in this was that of Seasonax's and not of NinjaTrader's. All information was for educational purposes and should not be construed as trading advice. Again, we thank you for your time with us. We appreciate you taking time out of your day to be here, and enjoy the rest of your day. Happy trading from everyone here on the NinjaTrader ecosystem.